welcome to Prime Investor, where we research and you profit. This is the 9th episode of Prime Q&A, where we answer our subscribers' queries. My name is Gaurav Menon, and today is a slightly special episode. Because today we've got Aarati Krishnan with us. Hello, Aarati.
Hi, Gaurav.
So in today's episode, we're going to focus on SGBs. First question is, if I buy an SGB in the secondary market, will I still get the 2.5% interest?
Yes, of course you will. So the only clarification I'd like to make here is that earlier when the SGBs used to be launched, the earlier tranches, the first few tranches, they used to carry a 2.75% interest. It is only the later tranches that carry a 2.5% interest. So whatever is the interest on the SGB, you will definitely get it even if you buy it in the secondary market.
Perfect. Thank you for that, ma'am. Now, the second question that a lot of our subscribers have been asking us is, should I buy an earlier month's SGB if it's cheaper? What's the difference?
That's right. So there are two routes to buy SGBs. The first one, of course, is when the government and the RBI together announce an SGB offer for a specific period within a week, and they notify it in advance, they advertise in the newspapers, etc. And you can go and buy it from the RBI during that time. That is something like an IPO where you're buying shares from the when the company itself issues, right? So similarly, the SGB can be bought in the primary offer from the RBI itself. Thereafter, the SGB is listed on the stock exchange, and anybody who has a demat account can actually go and buy the listed SGB in the stock exchange after checking its price and liquidity. So theoretically, therefore, it is possible for everybody to buy any issue of SGB that they want from the secondary market. But there is a certain practical constraint. The problem is that not all SGBs are frequently traded in the market. Now, the best way to look at the trading volume, etc., is to look at the NSE website. If you go to the National Stock Exchange website, there is a page there called SGB Watch. So if you go to that page, you will get a list of all the SGBs that have been issued so far, along with their trading volumes and their current prices. If you look at that list today, for example, there are 52 listed SGBs. Out of the 52, 9 or 10 are not traded at all. The trading volume is 0. So obviously you can't buy it because there are no sellers there, right? There are 12 or 13 SGBs which trade about in low volumes. About 50 bonds get traded in a day, right? So only if you hold less than 50 bonds, you will be able to buy those, or you plan to buy less than 50, you will be able to buy those SGBs. There are other SGBs, say 10 or 20 of them, which are somewhat actively traded, where you do see 100 or 200 bonds changing hands in a day. Those are the SGBs that you will find it more easy to buy in the secondary market. So what will happen if you buy the thinly traded SGB? The problem is that the price can be very different from what is the prevailing price of gold, and that would not be desirable for you as an investor. So I'd say look at the SGB Watch page on the NSE and pick out the SGBs which have high trading volumes so that the price distortions will be minimal.
Thank you for that, ma'am. Now, the final question is, how are SGBs taxed, and are taxes the same if I buy SGBs from the secondary market?
Right. In fact, taxation is one of the key reasons why sovereign gold bonds or SGBs score over gold ETFs, which are offered by mutual funds. So the interest that you receive on an SGB, the 2.5% or 2.75%, that is taxable, just like the interest on your bank FD, it is taxed at your income tax slab. But the capital gains that you make on your SGB, suppose I bought the SGB from RBI and I'm holding it for 8 years and selling it back to the government or RBI at redemption 8 years later, then the capital gains that comes on that SGB, that is completely exempted from tax. This is a very unique thing about SGBs, because even if you hold physical gold, it will be subject to capital gains tax. If you hold ETFs, it is subject to capital gains tax. But when it comes to SGBs alone, where you buy it initially and hold it till maturity, till 8 years, it is exempt from capital gains tax. However, if you sell it in the market in between, you don't want to hold it till the end of the 8th year and you have need of money, you sell it off. In that case, the capital gains that you earn on it will get subject to long-term capital gains tax if you hold it for 36 months or more. If you hold it for less than 36 months, it will be subject to short-term capital gains tax. Now, in cases where it's LTCG, you will get the usual indexation benefit that is there for mutual funds and other instruments. So, yes, if you hold SGB till maturity, which is 8 years, then there is no tax. If you sell it earlier in the market, there is tax, and it is capital gains tax. The second question you asked for, do you get tax breaks even if you buy it in the secondary market? Now, this is a bit of a gray area, because if you actually read what RBI has said in its FAQs, it says that when individuals offer SGBs for redemption, then it is exempt from tax. So that implies that even if individuals buy it from the secondary market and finally give it to RBI at the end of 8th year, it will be exempt. But there are some cases where the taxman has disputed this interpretation. So it is still a bit of a gray area. So if you want complete tax exemption, you should hold it till maturity. That is your best bet.
Thank you, Aarati ma'am. So that's all for today, folks. If you have a question about SGBs, let us know in the comments and we'll get back to you on that. Bye for now and see you next week.
Bye.